CNBC-TV18.
A surprise Democrat performance in the US midterm hurts world markets even as inflation concerns loom. Auto and consumer durables bear the brunt. Healthcare and energy exhibit some resilience.
Tata Motors deflates on a big miss in earnings and cash flows, higher debt and a cut in guidance by JLR after the woes, even as the company eyes some recovery in the second half.
Lupin leaps on beating street expectations on margins, but Piramal Enterprises and Deepak Nitrite slide after results disappoint. A bunch of other mid-caps like TeamLease and Quest Corp, as well as Prince Pipes, also seeing big swings on earnings.
Cryptos take a battering on fears FTX could file for bankruptcy after a proposed deal with Binance falls through. Probes by US regulators into FTX's activities only add to the concerns.
Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Sonal Bhutra as well as Manglam Malu. Well, it's turning out to be a session where, yes, we are weak because of the global weakness, and not to mention that we are waiting by for the US CPI data. So that is probably going to determine the further trend for the markets. It is definitely peppered with a lot of result reactions as well as expectations. So, for example, Tata Motors is your top loser on the Nifty. That one is down around 4.6%. And it's taken a couple of the other auto names with it. So M&M is down around 3% at this point in time as well. Separately, just want to point out that there is some amount of traction in a couple of the telecom names. So Bharti Airtel is managing to hold its head above the water, up around 1% for Bharti Airtel. And it's really a mixed picture for the financials, which have been outperforming all through the entire week, especially the PSU banking space, which is now seeing some amount of profit booking in today's trading session. A lot of results to watch out for. I can't even count the number that we are expecting in the next 2 odd days.
But the good part is we are towards the fag end of the earnings season, so I think that's some relief. But other than that, most of the numbers and most of the stocks, they are reacting to earnings as well. And we, of course, have Deepak Nitrite, which is one of them. It is losing in trade on the back of weak Q2 earnings. It was a top-down miss, so to say, and it was driven by their phenolics division. The stock is down 9% right now. Revenues declined 17%. We had EBITDA declining by 30% for the company on a YOY basis, leading to a margin decline of 900 basis points at 13.8%. Profits were also down 31% this time around. It was the advanced intermediates that did well for the company this time. So that was something that grew on a YOY basis, and that is a smaller chunk as well. So EBIT here was at 140 crore rupees, revenue at 685 crore rupees. But phenolics, that is one where the company has been very positive. The street has been watching out for that segment. That is the one which was a dampener. EBIT there declined 55% on a YOY basis, 45% on a sequential basis. So definitely not looking good there. But Aurobindo Pharma, that is the other loser, and some updates there as well, Ekta.
Yes, absolutely. You know, this is something that Timsy had put out in the morning. So the company has indicated that they're in the process of asserting further details when it does come to the director of the company. So this is Mr. Ramprasad Reddy's son that we're talking about, who has in fact been embroiled in this particular issue. So that is Aurobindo in fact clarifying at this point in time that at this point they are in the process of asserting further details. Obviously, the stock has taken a huge hit. The stock is down around 6% on the back of this particular piece of news, which we had broken in the morning. And Aurobindo, remember, has still not released its Q2 numbers. So it's still to release its Q2 numbers on Saturday. So, you know, it's just weakness ahead of that. It has nothing to directly do with the top management of the company. This person is a whole-time director and is the son of one of the co-founders or promoters of the company. It's not the MD, not the top management, but nonetheless, negative news coming in for Aurobindo.
All right, negative news coming in from the pharmaceutical space for Aurobindo Pharma, but can't say the same for Wonderla Holidays, because let's talk about that one. It's the first stock on our radar today, buzzing in today's trading session. Why just today? In fact, over the last 1 year or so, this year it's up almost 75%. And why is that? Well, because people post-COVID are flocking to all the amusement parks. The second quarter, which is a seasonally weak quarter for the company has reported a stellar set year on year. Of course, quarter on quarter, there has been a sharp dip because of the seasonality factor itself. What's heartening is that as compared to pre-COVID levels, the footfalls have grown by almost 32% and the average revenue per user has also increased to around 1,321 odd. We do have Arun Chittilapalli, who's the MD of the company, joining us now. Arun, multiple times we've spoken to you this year itself about how people are now flocking back to all these amusement parks. Turns out that they continue to do so in what was a seasonally weak quarter as well. What I want to know from you is that, the third quarter, which is relatively stronger as compared to the second quarter, how has performance been in the third quarter so far? And in light of that, what can you guide for the entire year?
See, I think this year is a bit of an anomaly, as you know, because we're coming out of a COVID period, and so footfalls have been strong for us in Q1 and as well as Q2 as well. In fact, if you look at the percentage-wise, our Q2 performance is stronger than Q1. So that's because I think the base is smaller. Like I said earlier, Q2 is a seasonally weak quarter. So going forward, also we can see good numbers. I think Q3 is also looking pretty strong. Now, how exactly it's going to pan out is anybody's guess, because it depends on many factors for us, because we are an outdoor entertainment facility. Weather and people's propensity to spend, holidays, all these things affect us. But so far, it's looking pretty strong, and I think we will end this year in a very good way. Is what we are feeling right now.
Okay, so ending on a good way is what the feeling is. But if you can just give us a trend or an idea of how October and November so far have looked in terms of footfalls. Were they better than quarter two, since you just said quarter three also is a seasonally strong quarter? And what would that turn in terms of average revenue that you are seeing per user or per visitor in your parks?
See, our ARPU will go up definitely to currently at about 1,300 levels, right? So we can expect that to go up a little bit more in this quarter, because I think we've taken the price hike only in September, and so that a lot of that has not been it's not reflected in Q2. So we can see more of that happening in Q3. So definitely there is an upside that you can expect on ARPU. There is also an upside that we can expect on footfalls, but footfalls, again, I can't, every month it changes, so it's hard for me to say that it's going to be up by so much percentage. But we can expect at least more than 20% growth is what we feel.
Okay. Do you have visibility in terms of at least your EBITDA as well as profit getting back to the levels that you saw pre-COVID, which was in FY20? You closed an EBITDA of around 104 crores. FY20 profit was around 65 crores. Are you back in a position to get back to those levels, probably grow it from here on? What is your guidance in terms of visibility?
So in terms of profit, the numbers, I think we've already beat that number. Just from Q1 and Q2, we've already beat EBITDA and profitability numbers. So I think definitely whatever we're going to get in Q3 and Q4 will be on top of that.
Right. I think it's a scratching line.
So yeah, so I think this year definitely be stronger than FY20. Now, to what extent we are going to go depends on how strong our Q3 and the remainder of Q3 and Q4 is. As all indicators now point that Q3 is going to be strong. Q4 is again a black box at this point. We don't know, because we depend on institutional sales for a little bit of Q3 and Q4, which is sale of tickets to schools and colleges. So far it has been strong, but schools and colleges are all themselves reopening after COVID, and so we don't know how their outing pattern is going to be this year. This year is going to be an anomaly, so it will be either higher or it could be a bit lower also. So we will have to wait and see that.
That's interesting, because the first half of this year itself, you've done an EBITDA of 111 crores. Pre-COVID peak was about 115 crores in FY19, and as far as revenues are concerned, you did closer to 300 crores in FY19 as well as FY20, and the first half of this year itself, you've done around 215 odd crores. Let's talk about other things. Just wanted to understand your outlook on the Odisha park. I mean, you've bought the land. Has the land deal been done? Chennai was put on the back burner. Has that happened? I mean, when do these parks come? What's the visibility here?
Yeah, so like I said, we have these two parks that are where we're going to get off the ground. Odisha is already, we have already got the land acquisition is already done. In fact, we are doing preliminary land works over there. We are in the process of designing the park right now. And once the design phase is over, we will start executing. So I don't anticipate any delays for Odisha. And Chennai also, we are expecting some good news to come in terms of, we've been in talks with the Tamil Nadu government. Hopefully, we will get a go-ahead to start our Chennai project also. As you know, we had put that project on hold because there is a very unfavorable tax situation in Tamil Nadu, which prevents us from going ahead with it. So once that is resolved, and we are getting indications that hopefully that it will be solved for us very soon, we will start construction. That whenever we get the news that the tax issue has been solved, we will start.
Okay. So by when do you expect the Odisha park to come on stream? Is it this fiscal or is it the start of next fiscal?
So the construction period is about 2.5 years. So
okay.
Roughly about 2.5 years is what we will take for this to come on stream.
Okay, cool.
Similarly for Chennai also will take about 2.5, maybe another extra 3-4 months because of the delay. But within the next 2.5 to 3 years, we expect 2 new parks to be operational. So that's how we are planning it.
Okay, all right, Arun, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Wonderla Holidays. At least people are now back to enjoying themselves entirely. So the stock is also up around 3-odd%, having a good time in trade today. We'll take a short break. Up next, we'll get in touch with the management of Lupin. Remember, that one has seen a good amount of upside today, reacting to what has been a good recovery Q on Q. We'll get in touch with the management next. Stay tuned.
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
सुन, इक्विटी में इन्वेस्ट कर, ग्रोथ का है चांस। सुन, डेट में है लो रिस्क, बात मेरी मान।
अरे बेटा सुन, गोल्ड सिर्फ गोल्ड, भैया ने भी यही किया।
सुन, अब तू कंफ्यूज मत कर यार। अरे मतलब सुन, सबकी कर मल्टी मतलब मल्टी एसेट एलोकेशन फंड्स, यानी 3-in-1 फंड। ये इक्विटी, डेट, गोल्ड तीनों में एक साथ इन्वेस्ट करें। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेज ध्यान पूर्वक पढ़ें।
2 साल में रेट रॉकेट 100%।
क्या भाई साहब, गेट सही प्राइस ट्रेंड्स at 99acres.com। घर लेना हो या बेचना, एक्सपर्ट से ही पूछना। 99acres.com।
Gains Technology India Limited, an end-to-end and IoT solutions-enabled integrated electronics manufacturing player. Initial public offering of equity shares of face value of 10 rupees each through the book building process, with a price band of 559 rupees to 587 rupees per equity share. Bid offer opens on November 10, 2022 and closes on November 14, 2022. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the BRLMs and the stock exchanges.
Welcome back. Well, it is definitely sluggish for the markets at this point in time, and I was just looking at the screen, and Piramal Pharma also stands out to me because that stock is down another 8.5%. It already came out with its numbers, but it seems as though the street is extremely unhappy in terms of the numbers that the company did release. Though it is not comparable on a year-on-year basis, revenue growth was up around 9-odd% this time. Margins also just about in double digits. So I think the street is hoping for more from Piramal Pharma. But the other stock that we're tracking within the entire pharmaceutical space is also Lupin, which has bounced back quite smartly post what was quite a dismal Q1 FY23, where the US revenue fell to $121 million. Their margins fell to lows of around 6-odd%. So the street was really anticipating whether or not the company would be able to come out with a Q-on-Q recovery. And that's exactly what they've reported this quarter. The US business has recovered to sales of around $160 million. Also, they have margins which have come in at around 10.7% versus that low of around 6-odd% or close to 11-odd%. The poll was 10.7%. So there has been definitely recovery, which the management had stated from the previous quarter, which has come through this quarter, and that's exactly what the street likes. In fact, we did catch up with the management, the top management of Lupin. Let's listen in to what they say, they had to say. I did start by asking Ramesh about the margins.
At the beginning of this year, I did speak about the fact that Q1 results were impacted by some stock corrections that we took. And that being done, you'd expect some normalcy to creep in insofar as sales are concerned in America. That was undoing insofar as the first quarter is concerned. Going forward, we think things should only pick up. We have a tight leash on costs, as is evident from the numbers itself. When it comes to, in fact, the SG&A spends, or for that matter, the workforce planning as it reflects in our manpower costs and the like, and the newer products, as and when it is brought into the market, that would also impact the overall results. So things are looking better. We had guided for the second quarter being better than the first quarter, the third quarter being better than the second quarter, and so on. So successive quarters would certainly look much better.
Sure. Ramesh, when you say successive quarters would look better going forward, when it comes to margins specifically, can you provide us guidance? Because at one point, the exit run rate guidance for Q4, when it came to margins, was around 17 to 18%. Are you sticking by that?
Yeah, the fourth quarter, if things go the way we are wanting it to go in terms of the products and the like, would certainly be in the range that you're speaking about.
Vinita, I just wanted to come to the US business because that seemed to have shown a strong recovery this quarter. Revenues have come in close to around $160 million. This is versus $121 million. What led to this recovery? And can you elaborate a little bit on the price pressure that you faced this quarter as well? Is the worst probably behind us?
So the business bounced back on, due to also the correction that we had taken in Q1. So there was that impact, but strong growth across both the baseline business as well as the respiratory franchise, in particular albuterol. So albuterol, we continued to grow our volumes, and share has remained very stable, growing and stable. So, a combination of both albuterol as well as the baseline products helped grow the business. We also had a couple of new product launches. We had Suprep out of Somerset and a couple of other smaller products with the Goa clearance earlier this year that contributed to the growth. And some seasonal pickup, minor, but some seasonal pickup that we have started to see in Q2 already. The oral solid product franchise still had price erosion. So we did see some price erosion in the high single digit, but we do think that our oral solid franchise now, with a combination of the price erosion that we've already seen over the last 12 to 18 months, plus the exits that we have implemented, have been working through on products that don't contribute, to profitability, really helping shore up our margin.
The company had guided for $200 million as an eventual sustainable run rate for the US business. You had achieved those levels maybe a couple of quarters back as well. What is your guidance? When can we get back to the $200 million level when it comes to the US business?
Once we have material new product launches, certainly as we launch Spiriva, we believe we have the potential of getting back there. Our focus, Ekta, has been very much on driving profitable revenues as opposed to just driving revenues. Back a couple of, I think I'd say it was 3 or 4 quarters ago, when we had revenues at $180 to $200 million level, we had a number of products where the margins were shrinking because of the price and margin pressures. And we wanted to, as we had shared in the last couple of quarters, we have implemented exits on products where it doesn't make sense to continue. Therefore, you will see some shrinkage in revenues. But as we launch material new products like Spiriva later this year, hopefully, FDA permitting, and other new product launches as we get into fiscal year 24, we would remain confident of growing our revenues as well as profitability out of the US.
Okay. Nilesh, I wanted to come to you with regards to India. It was up around 3% year on year. The street was anticipating maybe a higher growth this time round, and there has been some amount of volatility in the past couple of quarters when it has come to India. Can you just guide us in terms of what the growth rates might be going forward?
Sure. So we're not happy with where the India business is. I think we can do better. We've always stood for better. And we're seeing the green shoots of that growth coming back. Certainly delayed. We really expected it to start picking up from Q2 itself, which has not happened so far. So sequentially, we grew by 5.8%. Year on year, we grew by 5%. But while the market grew by 8.2%, we grew only by 6.2%. So we actually grew slower than the market. Primary reason for that is the diabetes space, where the market grew 7.8. So the market's still been sluggish on the diabetic space. It's a big therapy area for us. We grew only at 2.5%. This was primarily impacted basis genericization of some of the other molecules that's been happening in the diabetes space. Not enough new diabetic patients coming on stream as well. We do see it bouncing back in the second half. So cardiac, which was sluggish, has basically gone to the 10% kind of growth rate already. Respiratory, which was growing only at few percentage points, we see double-digit growth in the second half. We see diabetes possibly running a little slower. So while we basically grew by few percentage points year on year, we grew 5%. If you look at it at a 6-month period, we grew 4%. We basically do see double-digit growth for the second half. But overall, for the entire year, obviously that becomes a single-digit growth. Then nothing structurally broken. I think the market's bouncing back. We saw that sluggishness in cardiac. We've seen it recover. We'll see that in diabetes as well. The market is certainly resuming, and we expect to come back to industry-leading growth. Not in the second half, but certainly next year we'll have very solid growth again.
One last question. You have faced some US FDA issues. Your Pune biotech facility was issued 18 observations. Tarapur plant has received a warning letter. While you have managed to clear Somerset as well as Goa, these two probably are disappointments for the company. Can you comment in terms of where these two plants stand? What is the remediation? When do you think you'll probably be out of the woods?
So biotech, definitely 17 observations is more than the number that we should have had. It's an 8-page 483. So we have to keep that in context. We believe that the observations are eminently addressable, and that we should have a at the end of that as well. We're obviously disappointed with receiving the warning letter for Tarapur, and the concerns are on two areas. One is on nitrosamines, the levels that we have, how we assess those in our APIs, and potential cross-contamination. We put a very solid plan in place. I think in the next 3-4 months, we'll have covered a lot of very solid ground to go back to the FDA. I think there's been news on suspension of products from the facility and the like. There is no suspension. We continue to supply. This is a very important facility in the overall scheme of things for product supply to the US market.
All right, so that's about Lupin. The stock doing well in today's trading session, and commentary from the management coming in as well. But just keep an eye out on the market. The Nifty is on the verge of breaking that 18,000 mark. In fact, just about 5 points away. And that's important because we're at the low point of today's trading session. Were the Nifty to bounce, this perhaps would have been the zone for it to bounce back. Why do I say that? Because the second half of trade will be extremely crucial. It is weekly options expiry, and a couple of these options are, acting up in today's trading session. 18,100 and 18,050. Both these calls are extremely active. Bears getting on top of that. As we speak, the Nifty has broken below that 18,000 mark, and 1.5 crore shares written on the 18,100 call, 1.2 crore shares written on the 18,050 call. Bears believe that this is the zone that they have protected, and any levels upwards would perhaps see a fair amount of resistance. And were the Nifty to sustain above those levels, maybe we could see some sort of short covering. But will that come about or no? Because the 18,000 put, moments ago, it had about 9 lakh shares in open interest, which was added today, 90 lakh shares, and that has now come down to around 73 lakhs. So those put writers are actually running for cover. They are unwinding their positions. So this is a mark that I'll be watching out for. 27-28 rupees of premium on that one. So 1775 to 18,000 is an important support zone for the markets. Just keep an eye out on that. So that's as far as the FNO structure of today's trading session so far is concerned at midday. We take a short break, come back. On the other side, we'll be discussing the second quarter earnings and outlook for Pidilite with Bharat Puri, the Managing Director.
What is the current status of our cyber robbery?
Little bit playing tricks.
Alluring them a little bit.
Tempting them a little bit.
After that, their all money will be ours.
Our little awareness can stop their laughter and cunning tricks. Do not use unauthorized apps, unknown links, and don't allow unsecured Wi-Fi connections. If something wrong happens, report the matter immediately on helpline numbers.
बात सिर्फ मेरी नहीं, देश की थी। माइनस डिग्री में भी कॉन्फिडेंस प्लस में रहता था। वो जज्बा आज भी बरकरार है, सही मूव लेने के लिए, क्योंकि अब बात सिर्फ मेरी है।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोज फॉर द इंडिपेंडेंट यू।
आज ध्रुव के स्कूल से फोन आया, कहने लगे कि फीस भरो वरना कल से स्कूल आना बंद। क्या कहती हूँ कि बाप की गैर जिम्मेदारी की सजा बेटे को मत दो। तुम तो टर्म लाइफ इंश्योरेंस लिए बिना ही चले गए।
PolicyBazaar.com पे 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 430 रुपए महीने से शुरू।
To make my vision a reality, I have to see clearly from every point of view. With my Verilux progressive lenses, I seamlessly transition from near to far and see every detail in sharp focus. When you see no limits, there are no limits. Verilux lenses by Essilor.
Thank you, Amit ji.
जुग जुग जियो, जुग जुग जियो, खुश रहो, खुश रहो।
Thank you so much.
ओके ओके ओके। शादी भले ही वर्चुअल हो, थैंक गॉड, मिठाई रियल है। बीका जी रसगुल्ला, अब बजेगा ढोल।
अमित जी,
हाँ जी,
पी।
शनाई, बीका जी गुलाब जामुन।
पर आपने तो मिठाई खाना छोड़ दिया ना?
हाँ यार, पर ये तो बीका जी है ना।
Amit ji loves Bikaji, loves Bikaji.
Inox Green Energy Service Limited now proposes an initial public offer of equity shares. The 100% book built offer is being offered at a price band of ₹61 to ₹65 per equity share. Offer opens on Friday, November 11th, 2022. Offer closes on Tuesday, November 15th, 2022. For risk factors and other details, please refer to the red herring prospectus dated November 3rd, 2022, which is available on the websites of SEBI, the BRLMs and the stock exchanges.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, for the markets, the pressure continues for now. Nifty is down 160 points at the day's low. In fact, it has intensified. And the broader markets, they are actually underperforming the benchmark. So the mid-cap index is down 1.2% at this point in time. And some of the stocks in the mid-cap space or the larger mid-caps, so to say, sale is at the day's low right now. We have Power Grid 2, which is not doing so well. So that stock is down around 3% odd. Ambuja Cements is the other one, which is also sulking. It is at the day's low right now. From the other stocks that I'm looking at, it is Tata Power, which is not doing so well. So that stock also at the lows of the day. Z Entertainment comes out with numbers. That one also is down in trade as we speak. But one stock that is also in focus on the back of weak set of earnings is Pidilite. Company's gross margin dropped YOY and quarter-on-quarter, while high raw material cost hurt EBITDA and profit. Mangla Malu caught up with Bharat Puri, who's the MD at Pidilite Industries, and began by asking him about how raw material inflation impacted their margins. Listen in.
Guided and said very clearly that the second quarter will be the quarter where we will see the highest material cost ever, because that was the time we were cycling $2,500 a ton of VAM, and coupled with a depreciating rupee. Now, that's exactly what's happened in this quarter. I think the solace, however, is despite this, 60% material cost, which you're absolutely right, is unprecedented. We've never seen this in the past. We have still maintained our margins, at the same level as it was in the earlier two quarters. And, this is obviously through both pricing as well as cost management. The solace that I can offer is actually there is not just light, but a lot of light at the end of the tunnel. In the meantime, raw material prices have started softening significantly. VAM is now down to between $1,200 and $1,400 a ton. We will see some impact of that in quarter 3, but we will really see a flow through of that in quarter 4, because, right now, obviously, you will also have high priced inventory, which you will consume in quarter 3. So overall, if you ask me, by the time we are in quarter 4 and by the time we exit this year, we will be back to a situation, hopefully, of greater normalcy. And our focus will be on the traditional Pidilite focus of volume growth driven by innovation, driven by some great communication, and driven by distribution expansion.
All right. So, from a stock market perspective, if you had to give a T20 answer, can we say that, this is the worst of the margins for the company that's behind you now? Going forward, things will only improve. And by the fourth quarter, when you talk about normalcy, you're back to that long-term band of 20 to 24% on the EBITDA front. Can we say that?
I would think so. I mean, these days it's very difficult, Mangalam, to, we truly live in uncertain times, and geopolitics has become one more new factor. But having said all of that, from where I sit today and the way it looks, I think it would be a reasonable assumption. I think quarter 2 will be our highest ever material cost. I think quarter 3 will see some reduction. Quarter 4 onwards, you will see what I call the normal situation.
Right. And, let's talk about demand, because out here as well, and you're not the only one who's saying that rural is a problem, urban's growing much faster. Just wanted to understand if that's just transient, or is there something which is, talking about a deeper pain in rural demand in the country? Because we're all talking about, mass products not doing too well and premium doing extremely well, the K-shape that everyone talks about.
See, there is no doubt about the fact that rural and semi-urban gets far more the impact of inflation, because they see it directly, and therefore it tends to, have a far more direct impact. We are clearly seeing that, traditionally for us, rural and semi-urban growths were 1.5 times of urban growths, and now they've come down to the same levels of urban, at times lower. However, given the good thing is we are seeing some amount of tailwinds in terms of the increased construction activity. More importantly, inflation moderating significantly. And then if to that I add a good monsoon, that's why we say we're cautiously optimistic that by quarter 4, hopefully we will have what we call a normal situation. Barring some new black swan events, I think we will be back to normalcy.
The third quarter, will volumes be in positive terrain, mid-single digits sort of? Because normal, according to you, is double digits. Just wanted to understand the third quarter, and as a result of which the entire year.
See, the entire year, we are clear we will be in, our objective is double-digit volume growth. So that doesn't change at all. We don't, Mangalam, worry about 1 and 2 quarters. Remember, last year, our 2 best quarters were the second and third quarter for 2 reasons. One was, in the first quarter, obviously, there were significant closures, and there was a lot of pent-up demand which got released in the second and third quarters. There was also significant pricing in both the second and third quarters. And, in the economy, obviously, dealers tend to stock up, and therefore dealer inventory itself had gone up in the second and the third quarter, and that started moderating from the fourth quarter onwards. So overall, barring one quarter here or there, if you ask me over the year, will we have double-digit volume growth? Yes. Will our CAGR, I think, which is, if you ask me, the most important thing for us to consider is, over the pre-COVID period, do we have a compounded annual growth of in double digits? The answer will be yes, both in value and volume. And that's frankly our objective.
Right, and you were looking to enter 2 to 3 new categories this year as well, as you do every year. What are the categories that you've entered now, and how has growth been across all your segments, your growth categories, your emerging categories, as well as your normal core business?
See, what we've seen is, because core has a greater proportion of rural and semi-urban, it is actually core that has been under some amount of pressure. But the good thing is, if I look at my growth over the first 6 months, we have high teens to, growth in the 20s in volume across pretty much all of our broad-based categories. Even if I look at CAGRs over a 3-year period, my volume growths are in the mid-teens. So overall, I would say the situation looks good and it's broad-based. So whether it's our core categories, the growth categories continue to grow faster than the core categories. And in the pioneer categories, you would have seen, for example, whether it is tile adhesives, whether it is tile grouts. Now, these are areas where we've got into, whether it is now marble glues and stone glues. You will see a whole range of new products coming from us. In fact, over the next 6 months, pretty much every division of Pidilite will be launching a new product every 1 to 2 months.
You partnered with 100x VC as well, looking at 3-4 investments in the year. Is anything on the cards out there in this year? Can we expect something?
We keep looking at in our sectors, we've always said we're a learning company. We will learn, and this is a sector, the startup sector is an area of accelerated learning for us, and therefore wherever we find that these are sectors that we're interested in, we keep looking at opportunities in what I would say are sectors relevant to us, and we keep at it, and you will see that happen going further also.
On a couple of brands, I'd like to get your thoughts. One is on Araldite itself. Has it totally scaled up to your entire distributions force, and have all the synergies been realized? Just wanted to understand what the run rate it's going at. And the second one is on Dr. Fixit as well. If you could give us a sense of the run rate.
See, as far as Araldite is concerned, the answer is, in urban India, we have obviously scaled up completely. In rural and semi-urban, it's still a 12 to 18-month runway before we actually achieve full distribution. And we therefore always said that while Araldite is a leader product, we see it as a growth product because we see a lot of opportunity. And when we look at the growth rates, they reflect that. As far as Dr. Fixit is concerned, Dr. Fixit remains one of our growth categories. It is growing. In fact, it's growing faster than most of our other categories. It's good, substantial volume growth across a broad base of both geography as well as products. And we've always maintained that the issue in waterproofing, frankly, is not worrying so much about, obviously we will keep a hard look at competition, but it is about expanding the market. If 5 out of 10 consumers are doing any good form of waterproofing, then as leaders, our greater task is to make that 5 into 7, rather than worry about getting share only out of the 5. And that's something we've been focusing on, both from a sales and distribution point of view, and more importantly, from a product innovation point of view. And therefore, Dr. Fixit, as far as we see going forward, it will remain a substantial growth driver.
Okay, so that is the management of Pidilite, and in the same space, FMCG, there's Zydus Wellness, which came out with its numbers and it's reacted quite negatively to it. So that stock is down around the profit is down around 60% on a year-on-year basis within the entire consumption space. So as you can see, Zydus Wellness down, reacting to what has been a disappointing performance even on the EBITDA. We'll take a short break. On the other side, we will put the focus on Tata Motors, which is your top loser on the Nifty, and Piramal Enterprises, which is reacting to its financial business performance. Stay tuned for that.
Gains Technology India Limited, an end-to-end and IoT solutions-enabled integrated electronics manufacturing player. Initial public offering of equity shares of face value of 10 rupees each through the book building process, with a price band of 559 rupees to 587 rupees per equity share. Bid offer opens on November 10, 2022 and closes on November 14, 2022. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the BRLMs and the stock exchanges.
आग को फैलने से रोकना मुश्किल है पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाइड क्लब प्राइम आग से बचाए।
Presenting the next challenge between two animals.
Who seems faster amongst the two? Then why place all your bets on the elephant? Similarly, in investments, horses are like smaller companies. Even with ups and downs in the journey, they can run faster than the elephant like big companies and show higher potential. Along with investing in the horse, what if you also get tax savings? That's right. Introducing Samco ELSS Tax Saver Fund that aims to create wealth for you by investing in high-quality small and mid-sized Indian companies and also helps you save tax with ELSS. Invest today. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Will snow days be a thing of the past? Or are we smarter than that?
You know, people often ask me why I left my steady job at the call center. I wanted more out of life. So, I launched my own startup. Do you want to know how? Then start up your own business as an LIC agent. You want it, we've got it. Great products, zero investment, leading organization, and unlimited opportunities. So are you ready? Now think big. Become an LIC agent.
Visit our website or contact your nearest LIC branch.
भारी लोड है, गाड़ी फंस गई तो?
बॉर्डर पर हमारे जवानों तक पहुंचना जरूरी है।
टाटा योद्धा 2.0, जहां जमीन है वहां रास्ते हैं।
आपका नाम है? हाँ जी। हाँ जी। कैनेरा AI1 बैंकिंग सुपर ऐप यूज किया है? हाँ जी। IPO के लिए अप्लाई कर सकते हैं? हाँ जी। फास्ट टैग, मोबाइल रिचार्ज, कार बुकिंग? हाँ जी। हाँ जी। हाँ जी। इस ऐप में रंग बदल सकते हैं? हाँ जी। क्या आप रंग बदल रहे हैं? हाँ जी।
Canara Bank presents AI1, the all-in-one banking super app loaded with over 250 features for all your banking needs and more. आपके सपने हमारे अपने।
क्या ये सच बोल रहा है?
हाँ जी।
Welcome back. We'll slip below 18,000 for the Nifty, but we have a lot of ground to cover in terms of specific stocks. So let's talk about the top loser on the Nifty, which is Tata Motors. It has disappointed the street and it has disappointed brokerages as well. Sonia is here to tell us more about what the brokerages are making of what was a disappointing set of numbers.
Thanks a lot for that, Ekta. Well, you know, to start off with, I have Motilal Oswal, which has said that JLR's numbers are an all-round miss and they've cut their EPS estimates for FY23 to a loss from a profit earlier on. They still have a buy on the stock, though, with a target price of 500 rupees. Followed by which there's HDFC Securities that has maintained a reduce with a target price of 415 rupees. Now, the main concern, according to them, is the rise that we've seen in Tata Motors' debt. The debt has risen to almost 60,000 crores, and that is a big concern. And it will be challenging for the management now to meet their net debt-free target by FY24. Let's move on to Phillip Capital. That is a bit more optimistic. They say that all of these global risks are transient in nature and the stock offers a great risk-reward perspective at current levels. They maintain a buy with a target price of 530. JP Morgan has a neutral on the stock with the target price cut to 410 from 450 earlier. They've also cut the FY22 to 25 EBITDA by 3 to 9%. They say the India business has disappointed in this quarter and the management has cut the guidance for volumes and free cash flow for the second half of the year. CLSA has an outperform. They've raised their target price to 491 rupees. JLR performs better than the India business in the second quarter, they say. So all round, if you'd have to see, it's a bit of a mixed bag. Most brokerages are disappointed with the fact that the JLR business is on the weaker side, but also the fact that debt has been rising and the company has cut their guidance. Back to you.
All right, Sonia, thanks a lot for that. So that's about Tata Motors, but Piramal Enterprises, Ekta, it's Piramal Pharma is what Ekta spoke about. Let's talk about enterprises. Now there are two different businesses. One of them is the financial, the other one is the pharmaceutical space. Piramal Enterprises is down almost 9% odd. Abhishek, what was so bad in the numbers that the street did not like?
When you report a net loss, this is what the street will reward you, right? So, to begin with, Piramal Enterprise in their financial services business have reported a massive loss of 1,537 crore. This is on the back of the fact that stressed assets have weighed on the performance. So, provisions are at 3,300 crore plus, which compares to 122 crore in the previous quarter. Now, interestingly, rupees 5,888 crore worth of book has moved from stage 1 to stage 2, which is like, overdues which are more than 60 days but below 90 days. In that, you have seen an inflow of about 5,900 crores. So they are large and lumpy accounts. Management has mentioned that it can expect some of these books to turn into NPA. So from stage 2, they can go to stage 3, which is overdue of more than 90 days in the coming period. Retail disbursements were strong, up about 21% YOY. However, AUM declined by 4.8% YOY and about 1.25% sequentially, given the fact that, wholesale book has declined both YOY and quarter on quarter. So we have CLSA on Piramal Enterprise. They have downgraded the stock to underperform from buy, and the target price has been reduced to 900 per share from 1170 that they had earlier. They say that, there is another big provision hit on the wholesale loans. So this 3,300 crore worth of provision actually compares to 1,100 crore of provisions done in last 2 quarters. Worst may be over, but investors won't digest this. Back to you.
Okay, all right, Abhishek, thank you for that. That is Piramal Enterprises down 9% in trade.
I just want to point out about Piramal Pharma. So I've been trying to work the phones with regards to Piramal Pharma as well. And it seems as though the conference call takeaways and the management commentary hasn't been that encouraging. So that's the reason why you're seeing the kind of reaction that you are on Piramal Pharma, because remember that the numbers had already come out around 2 days ago. And yes, it was a weak set of numbers, but the commentary really hasn't enthused the markets either. So as you can see, the stock has corrected around 30% already from the levels of around 200 rupees that it had listed at when the demerged entity, which is Piramal Pharma, had listed separately on the exchanges. And remember that the story for Piramal Pharma is that it has one of the best US FDA or compliance, compliance histories ever. But still, that isn't enough to enthuse the street or to give them that kind of resilience. So the management commentary is really got.
So if you're holding either of the Piramals and saw Pharma today perhaps is not a good day for you, sitting with a cut of almost 9 to 10 odd percent.
Yes, it is.
And in fact, it has been on a downtrend ever since it listed, so it's just not seen any kind of respite.
Okay, all right. That is about Piramal Pharma as well. For now, we'll slip into a short break. We'll get you more on markets and stock-specific action. Stay tuned.
Inox Green Energy Service Limited now proposes an initial public offer of equity shares. The 100% book built offer is being offered at a price band of rupees 61 to rupees 65 per equity share. Offer opens on Friday, November 11th, 2022. Offer closes on Tuesday, November 15th, 2022. For risk factors and other details, please refer to the red herring prospectus dated November 3rd, 2022, which is available on the websites of SEBI, the BRLMs and the stock exchanges.
दादा आप फ्लाइट कहाँ बुक करते हो? इक्सिगो ट्रेन, इक्सिगो बस, इक्सिगो साइकिल, इक्सिगो ज्यादा बोलिए, बड़ो ज्यादा बोलिए। और कौन सा ऐप डाउनलोड करना चाहिए? इक्सिगो और निकल लो।
My journey of insurance and investments began at the same time when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results so that you enjoy the ride. And when SEEP is with you, you can soar high!
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ।
कभी सोचा नहीं था कि डॉक्टर फैमिली से होकर भी एक आर्टिस्ट से शादी करूंगी।
वैसे डॉक्टर को वाइफ बनाना भी एक आर्ट है।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोर्स फॉर द इंडिपेंडेंट यू।
चाहे खरीदना हो अपना घर या हो रिटायरमेंट के लिए फाइनेंशियल प्लानिंग, मुझे फ्यूचर की कोई चिंता नहीं, क्योंकि मेरे पीछे SMC है।
SMC, money wise, be wise.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Can someone working alone solve all the world's biggest challenges? Isn't collaboration the way we'll make lighter, more sustainable packaging and generate limitless energy? At SABIC, we believe the chemistry between people is the chemistry that matters. SABIC.
Welcome back. Well, we are also watching out for Oberoi Realty. The stock is declining in trade, though it has recovered a tad bit from the lows because they have an EGM on 1st of December and it is to purchase one or more projects that is from their JV or a related party in the 360 West project at an aggregate consideration of 4,000 crore rupees. Now, 4,000 crore rupees is a big amount and that's why the street was a little nervous because it will increase the company's debt. Jefferies has come out with a note where they say the net cash outgo for this could be around 1,500 to 2,000 crore rupees and net debt will double on the back of this, but net gearing will still remain on the lower level. Oberoi Realty, remember, owns a stake of 32.5% in this particular JV. What it will do positively is give more access to higher price projects or luxury projects. So while debt increases, there could be some financial opportunity as well for the company, and that's why the stock has recovered a tad bit from the lows as well. For now, we'll do one thing. We'll slip into another break and we'll get in Manisha Gupta, who is joining us with Aditya Jhunjhunwala, president at ISMA. Stay tuned.
Gains Technology India Limited, an end-to-end and IoT solutions-enabled integrated electronics manufacturing player. Initial public offering of equity shares of face value of 10 rupees each through the book building process, with a price band of 559 rupees to 587 rupees per equity share. Bid offer opens on November 10, 2022 and closes on November 14, 2022. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the BRLMs and the stock exchanges.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
To make my vision a reality, I have to see clearly from every point of view. With my Verilux progressive lenses, I seamlessly transition from near to far and see every detail in sharp focus. When you see no limits, there are no limits. Verilux lenses by Essilor.
Welcome back, and joining us on the show is Aditya Jhunjhunwala. He's president ISMA. Aditya, hi, welcome to the show. I want to start with what the sugar is doing in the international markets of 4-month highs, and this is because India has allocated a lower sugar quota and Brazil seems to be bending more towards ethanol.
Absolutely correct, Manisha. If you see, the sugar sector is in a better situation now, and with the consumers being the priority of the government and the industry, the prices of sugar remain stable with the minimum stock of the industry that we have in hand.
We do now, yeah.
Sorry.
Please go on, Aditya.
And then with the export of 60 lakh tons, which the government has given in the first tranche, as you know that ISMA was looking forward to getting an 80 to 90 lakh tons, but we are happy with the 60 lakh tons of the first tranche. So the government has assured us that once we give these exports and the production figures comes in, we will have an opportunity for a next second tranche of exports.
Aditya, also, how much has been contracted already? Because I do understand it was a delayed notification and there has been rush from the mills to sign dealings.
Yes, absolutely. The numbers what we have is approximately 27 to 28 lakh tons have already been contracted, and they're still in a faster speed now.
What's the kind of demand that you're looking at in the Indian markets? Because domestically, if you look at the International Sugar Organization report, it suggests 5.6 million tons of a global surplus for 2022-23.
Correct. But you see, there are different types of a cycle of the sugar because the Brazilian production will come in March, and that is the window that we need. India needs to use that. And that is what we were requesting the government to give us allowance so that we can export the sugar from 1st of October till 31st March.
Right. How are you looking at the ethanol pricing itself, Aditya? Because we've seen the sugar pricing, ethanol from sugar juice being higher than the other ones. How do you look at this pricing, and what is the profitability that the mills have from producing ethanol directly from the sugar juice?
Exactly. So if you see, as I have requested earlier also, the total surplus of sugar that we have, we need to convert that into ethanol. And we have to achieve the 20% blending target by the government and the industry to make an equilibrium between the sugar, ethanol, and the sector. So to achieve the 20%, we need to convert more of sugar into ethanol. And that is why the industry is pressing to convert more of the sugar juice and syrup into ethanol. So there is some issue on the pricing. We have requested the government for a little more on a pricing incentive for getting the new greenfield projects into this sector.
Fair point. Aditya, also, how are you looking at the crushing part itself? And of course, Maharashtra did outperform in the previous season. What are the numbers telling you right now?
So the current position, what we feel is the production would be anywhere between 410 lakh tons, little on the plus side. And depending that we convert approximately 50 lakh tons to ethanol. And now in the first tranche, we do 60 lakh tons for export. So we need the balance sheet looks nice. Only there would be a surplus of another 20 lakh or 30 lakh tons, which we would like to export.
All right. I have one final figure to ask for, Aditya, and this is about, we did see record exports last year and the record Indian consumption as well. Are exports numbers we already have in hand? What is the kind of consumption that you're looking for in the new season?
So the consumption would be a little bit higher on the last year. So last year we achieved 272 lakh tons. I think this year we are targeting 275 lakh tons.
Point taken. Aditya, thank you so much for joining us and giving us all those numbers, and in a jiffy. It's almost as if you had it on your tips of your fingers. Thank you as always. We really appreciate your time. And with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action forward.